Okay, well, I guess we can go ahead and get started, guys. I know a couple other folks are going to join us. So we have actually a really great panel today, as well as presentations and content. By now, everybody knows the Paycheck Protection Program, PPP. It is a program that's out there to help small businesses to deal with COVID-19 and kind of keep payroll and keep their businesses open. And so we know there's been a lot of questions and developments with PPP and loan forgiveness. And also would encourage you, there's still ability to apply if you haven't applied yet. There's still funding available. The deadline is June 30th. So definitely if you haven't applied yet and you're trying to just feel it out from this webinar, you definitely should. And I think a lot of the webinar today, we're going to focus a lot on loan forgiveness and different developments with that and things that have come out. So before we turn it over to the presenters, I just wanted to say Florida SBDC at FIU, if you're in Miami-Dade and Monroe County, then we are your SBDC. We receive federal funding from the Small Business Administration. We are an SBA resource partner. We also receive funding from the state of Florida and then other funds as well to provide one-on-one business assistance to help you grow your business. So obviously we can't do that if you're impacted by the pandemic or hurricane, any other type of disaster. So we are focused on helping you to access capital, come up with marketing strategies, HR, operations, things like that. So if we can assist you, feel free to follow up with Brianna and she can get you more information on SBDC. But with that, I want to turn it over to the presenters. We have a great presentation from Raju Mohandas, who's one of our SBDC consultants, also Orlando Espinosa with M&AO Media, and Jonelle Hine with the SBA District Office. So with that, I don't want to take more time because you didn't log on to hear from me. You want to hear from the presenters. So with that, I'm going to turn it over to Orlando. And just thank you for organizing. Thanks again.
Thank you, Brian, and thank you, everybody. Listen, this is one of the hot topics for all the small businesses right now, the PPP, and now it's the PPP FA. But before we get started, I actually am going to encourage you, any questions that you have, please put them in the Q&A. I will let you know right now that we are not going to go over the specifics when it comes to the loan forgiveness portion, because the application just came out a couple of days ago. We are going to answer questions, but I just want to let everybody know that we spent yesterday afternoon reviewing content for today. And what we wanted to do was give you up-to-date information when it comes to the actual application and when you start filling that out. So we are working on a part 2 that's going to be geared specifically for the PPP loan application, that's going to have more information, more of the meat and potatoes of what a lot of businesses need. So without further ado, what I want to do is what we're going to do actually is we're going to talk a little bit about the CARES Act and the PPP Flexibility Act and some of the updates and changes that took place in the recent weeks. So before we go ahead and get started, I know that a lot of you probably have not applied to the EIDL loan. So I wanted Jonelle to highlight a couple of things within the EIDL loan. And it is open, correct, Jonelle? People can start applying?
Correct, yeah. It just got opened this week for all entities, whether you're a for-profit or nonprofit. We had closed it down after the last round of funding for the PPP because our agricultural enterprises became eligible to apply for this program. So we opened it only for those entities for a while, but we are back now taking applications for all entities. So if you did not have a chance to do this because you thought you wouldn't necessarily need the money when the coronavirus first came around, I mean, you have the ability now to apply and to take advantage of this particular loan. This is one of our 2 disaster loans that we typically roll out when there's a disaster declaration. We have a physical damage one, which you might have remembered we rolled out after Hurricane Irma here in Miami-Dade County. And then we also have the economic injury. Since there was no physical damage to businesses or homeowners for this pandemic, the only thing we could roll out was the economic injury. Again, this is a fixed rate loan. It's for-profit businesses. It's 3.75%. For nonprofit businesses, it's 2.5% fixed rate for the life of the loan, and it can go up to terms of 30 years. Due to the amount of applications we've received, our agency has capped the loan amount at $150,000 per entity right now. But it's there to help improve the working capital position of your company by allowing you to pay your normal monthly business expenses when you probably are not seeing as many revenues coming in right now. You may be shut down completely depending on what type of industry that you're working in. But again, it allows you to pay, whether it's payroll expenses, it could be payments to your suppliers, it could be regular general business expenses like credit cards or any types of loans that you have on any of your personal or real property for your business. The thing that changed with the CARES Act when it was passed at the end of March was it allowed us to modify the loan with what's called the EIDL advance. And that advance amount is up to $10,000. We figure that at $1,000 per employee, but we've got a streamlined application process that's listed at the bottom of the screen. And you go in there, you put in some very basic information about your company, and then it gets submitted to SBA and they're working on it. Now, originally we were having difficulty because of the amount of applications we had. We had a little bit of difficulty handling that overload, but I think we're starting to see more loans getting approved, and the process timeframes are starting to shorten a little bit. But it is still open, it is still available. Currently, the deadline under the disaster declaration is December 18th of 2020. Depending on how long the coronavirus lasts, that may actually be extended, but currently it is through December 18th of 2020. So we'd rather people apply sooner rather than later. Even if you think you might be able to take it, make it without this loan. If you have the loan, you apply for the loan and you get approved for it, you don't have to take it. So if your revenue position increases, it's not something that's going to affect you. You can always say no to the loan. That's what I wanted to say, Orlando.
Yeah, thank you. And one thing that I actually want to reiterate for those of you that probably already applied and you're waiting, if you did not get an email stating that you did not qualify, a rejection, I will tell you that a lot of the businesses that Raju and we've been talking to and working with and so forth, it's been a slow process, steady process, but it's been consistent where, once the SBA comes in and they deposit the EIDL advance, if you qualify for it up to, $10,000, it's $1,000 per employee. So what we've heard in the businesses is that they get the advancement deposited. Then the next phase is the SBA checks their credit. So for those of you, go in, and if you have any app that shows you your credit score, see if there's been a pull by the SBA. And then the next phase is actually getting an email that you will get an email. You will be assigned a loan officer, get an email. And I actually spoke to someone yesterday that they got an email, and in that email, they went in, created their account, and right then and there, their account stated how much money they had actually been approved for. So the process has actually been streamlined. It's become easier. If you have not applied, I encourage you to apply. And if you have applied, be patient, and there's no way of the SBA checking specifically where your application is. You would actually have to call the disaster office, and if you need that information, we can definitely share the link for that and so forth. But Raju, I actually just wanted to cover all of this because now it's going to be the meat and potatoes of why we wanted to come in and talk to, and it's going to be the PPP-FA updates. I love all of these acronyms that are out there, and of course I make up my own acronyms, and I'm not going to tell you what I think these acronyms are, but there's a couple of changes that took place. So before you come in and you start looking at, I need to fill out the application because I want the loan forgiven, I want it forgiven, I want it forgiven. The key thing is that we want to make sure that you understand the updates and what each of these updates entailed. So what we did, that we broke them down for you in order for you to understand. And once you understand all of this, that's why I stated earlier, then we're going to go more into the second portion of this in a later date. That's going to be the actual application and what needs to be submitted and so forth in order to get the loan approved in order for it to be forgiven. So, Raju, I know you've been anxious because we spent yesterday afternoon going over all of this, Jonelle, Raju, and I, and what we wanted to do was simplify it for you. So let's go ahead and just dive into the maturity date, Raju, because I see you keep unmuting your button so you can start talking. So go ahead, Raju.
Okay, hi, good afternoon, everybody. Yes, basically, prior to this PP application, it was meant to be for 2 years. And what they have done is change it to 24 months. I mean, 24 weeks, I'm sorry. That would be great if it was 24 months. But it changed it to 24 weeks, and the loans received after 6/4 have a maturity of 5 years. That means the loans, the actual loan, can be extended for 5 years at 1%. The other one was 2 years at 1%. It's still 2 years for 1% to anybody who applied for 6/5 before June 5th. Okay, now they can be changed to 5 years, but that has to be negotiated and see if your lender was willing to do that change to consider. It's not automatic. You have to negotiate with your lender and whether the lender will want to do that change. It's not automatic. Obviously, there are other things to consider, to the remaining loan amount and the bank fees to modify the existing loan agreement. So these are some of the things that you may need to keep in mind if you're going to try to change it from 2 to 5 years maturity. The rate is still the same, 1%. Okay.
Yeah, and Raju, before you go on, I actually just wanted to answer one of the, more so a statement. Joel actually said the process for the EIDL loan was easy. They applied about a month ago, received an email of approval, signed docs, and received their money within 2 days. So I don't know if that was in the with the PPP or if that was the EIDL. But listen, don't overcomplicate this. If you're going to apply, like Brian said earlier, there is still money for the PPP and the EIDL loan, which is open to apply. Go ahead, Raju. And Jonelle, feel free to unmute yourself when you want to talk, and I'll go ahead and turn over the screen to you.
Yeah, no problem. What Raju is saying is correct, and what Brian said is correct. We have almost $129 billion left. What we have is a limited time for people to get approved for this loan. Because they have modified some aspects of the loan, the one thing they did not modify yet is the deadline with which to apply, which is June 30th. So we're basically 2 weeks away from the time that we will no longer be able to offer this loan, unless that's changed by Congress. I never say never anymore because we've been seeing that this is a very fluid situation and there have been changes and modifications to all of these loans going forward.
Yeah. Next slide. Oh, okay. Well, the deferred period, that also has been changed. There are some changes to that. Prior to this was the deferral was 6 months. Now the deferral is set up to be 10 months at the end of the loan forgiveness period, the 24 weeks. Now, this is great news for a lot of businesses because if they're working on cash flow, this is great because think about it this way. You got 24 weeks to go through the money. Then the lender, you will do the application. The lender has 60 days to process the loan, and the SBA has 90 days to make a recommendation or accept it. So if you think about it this way, between the 10 months, the 60 days, and the 90 days, you could have over a year before you start making a payment on this. So cash flow wise, for a lot of the business who are really hurting, this is a benefit that they can do it. Now, the only thing is the interest continues to accrue during that deferral period, but if it's adjusted at the end, remember, it's only 1%. So even if you owe some money on that, it's still better than paying it all in 6 months. So, but you must submit the loan within 10 months after the loan forgiveness period, which is 24 weeks. So you have 24 weeks plus 10 months.
Jonelle.
Well, I think that this change was made because when we originally rolled out the guidance for forgiveness, it looked as though with the timeframes that Raju said, 2 months for the lender to look at the forgiveness application, and then 3 months for SBA, it looked as though some of the businesses were going to have to start making payments because they'd be outside of the original 6-month deferral period. So I think that, SBA listened, other people listened, and that's why they came up with tying it to whenever the forgiveness is actually adjudicated by SBA and the money is provided to the lender. That's when the payments would restart. And obviously the overall focus of the goal, or the goal of the loan, is to get the full forgiveness amount, so you don't have to make any payments on it.
Correct. That was a great benefit for the businesses. You know.
It was. It definitely was. So, Raju, let's talk about the payroll tax deferral. I know that that's one of the things actually that that people were concerned with, asking questions and so forth. Everybody, because there's so much information out there. And like I said, what we wanted to do was simplify this for everybody, So go ahead, Raju.
Okay, the main thing is the payroll tax deferral allows delayed payments of employer portion, which is your Social Security payroll cost, okay? And you can now defer it, and they allowed it to be deferred until 12/31/2020. Again, this is a great benefit for the banks, for the businesses, because cash flow wise, especially during this period, I can postpone that cost of paying that down, and it's free interest. It's not that they're going to charge you the money. They're going to charge, they're just going to, your payments needs to be done 50% at 12/31/2021 and 50% of 12/31/2022. So that gives you a lot of deferment. A lot of businesses did not want to do that because it was a very short period. So they said, just keep paying it. But now they can save that money and use it for their own working capital, as opposed to paying the payroll taxes and defer that amount.
Yeah, and Raju, and can you clarify, George actually wrote a question, and he actually spent the money on payroll. Is it true that the money has to be spent in 8 weeks, or that period has been extended to the 24 weeks?
Well, we will cover that shortly, but yeah, he has a choice. The new standard is 24 weeks, but he can elect to do it in 8 weeks.
Right, and we'll talk a little bit more about that, George. And just to reiterate, Arnold actually asked a question that if it was possible to use the PPP to apply for a loan to buy a franchise. So Jonelle, if you can, clarify
No.
the PPP.
The answer for that is that no, there's specific uses of those funds for PPP. The majority of them have to be spent on payroll costs, because obviously this was a way to provide our businesses with the ability to pay their employees, even if they weren't actually open for business, to keep them off of the state unemployment rolls. So most of it has to go through to payroll costs. And then the rest is, there's 3 specific items that they can utilize the funding for. One is for utilities, one is for rental payments, whether it's real or personal property, and the other is for mortgage interest, again, for real or personal property. But a down payment for a franchise would not be eligible under this particular loan, and neither would the idle money be used for that.
Correct.
Good. So the forgiveness, listen, everybody wants to be forgiven. so everybody. So Raju, I know that this is something that we keep talking about. And I thought a couple of weeks ago, we had a couple of cases of business owners. And one of the things that we kept reiterating was make sure you keep all your documents, keep your documents separate. You know what? Do not intermingle any funds that you have that you may have gotten by way of other sources, whether it was the Florida Bridge loan or the idle loan, but to keep the PPP separate. So if you can talk a little bit about that in regards to also George's previous question that I asked.
Okay, now on the forgiveness period, there is still more clarity that we still need, but basically it is right now the way the standard is 24 weeks, and the businesses can elect 8 weeks period. There's still some guidance on that and what happens during the middle of the period between the 8 and 24 and using the final date, but those might come out in the next few days or few weeks. But basically, the borrower receiving a PPP loan prior to 6/5/2020 may elect to use the 8-week period. Everybody after the 6/4 must use a 24 forgiveness period. There is no option to use any forgiveness period other than the 8 of 24. Now, we all know that, these are hard lines and timelines, so we need to kind of maybe have some more clarity or guidance that may come out in the next few weeks. But basically, you choose the 8 or 24 week period, and then everybody is used to 24 weeks. The new standard is 24 weeks. Anybody prior to 6/5 can use or request to be changed to the 8-week period.
Yeah, and the reason behind that, Raju, is we were hearing from businesses that were not able to fully ramp up with their staffing during the 8-week period. And so we heard that a longer period would work better, not for every industry, which is why I think they left the flexibility for those that received the loan prior to June 5th, where they can choose themselves whether or not they use the 8-week or the 24-week period. But going forward, any like you said, any loan that's approved by SBA after June 5th or later, it has to have the 24-week period.
Correct.
And again, we are going to be getting additional guidance on this. There's going to be a lot more information coming out.
Yeah, and a lot of this information right now, and like I mentioned earlier, for some of you that actually just joined us, what we wanted to do was break down all of the updates and the changes that actually took place with the new, I guess, the new changes to the PPP. But we are going to talk about the loan forgiveness application in another webinar where we're going to dive in more in depth and ask a couple more questions. But I will encourage you right now to identify where your business is at, how you're actually spending the funds, and once again, keep in line with what the requirements were when they started. But for now, a lot of this is actually going to shift and change, but it's more so updates that are going to be beneficial to you as employees. Let me go over a couple of questions. Jonal and Raju, we've got a question from Berta Gross from La Vela Coffee. Berta, how are you doing? But can payroll be paid to part-time employees? The payroll that's employed to pay to the part-time employees, PPP. Payroll paid to part-time, okay. Employees be included to calculate the forgiveness application.
Yes, I mean, part-time employees are considered part of the payroll. And what you have to do is, we cover that a little bit going forward here in another slides, about what they call the full-time equivalency, the FTEs. You need to be able to, that they will be counted towards the FTEs. Yeah,
and Jonal, can you actually share a little bit about the PPP and who actually qualifies for the PPP, W-2, 1099, sole proprietor?
For the applications, yeah. So the PPP, the basis of the loan is you have to take your normal average monthly salary expenses, and then you multiply it by 2.5 to give you basically 2.5 months of funds that you can then utilize. However, if you have W-2 employees and 1099 independent contractors that are included in your salary costs, you could only include the W-2 employees. The 1099 independent contractors were allowed to apply on their own. So that was one of the things that was clear in our first interim rule, which came out on April 2nd. And then if you were a sole proprietor or self-employed, you could obviously apply as well. A partnership, an LLC, whether you had employees or not, and additionally S Corps and C Corps. The one thing that was also restricted was that if you were an S or C Corp and you paid yourself through distributions as the owner of the company, those were not actually considered eligible salary costs. So I know that there's a segment of the business community that was unable to apply. I've heard that there may be pending legislation for another round of funding. So that might be something that comes out next time. But for right now, that's the only ones that are there. And I gotta apologize to Berta because I have an email to her that I haven't actually finished yet, but I was gonna answer her. Yes, you can pay part-time employees. And when you go through the forgiveness application, which again, we just got the 2 new forms on it, there are steps to include your part-time employees in that FTE calculation.
Okay, good. And there's a question here that I actually want to go ahead and just answer, Nalita. One of the things that we have found, a lot of business owners, I know you say you applied through your bank. What a lot of businesses actually did, they went outside of their bank. They went to a community bank, or they went to, I don't know what's the name, Jonelle, for the lenders. But I know people that actually applied through Kabbage, and they got their loan.
FinTech companies, yeah.
Call them again? Say it again?
FinTech.
Okay, FinTech. That's right. So they went through others. So I know people that actually applied through PayPal, through Kabbage. Someone applied through Kabbage, and they actually got their PPP approved within 2 days. So if you know what, you're dealing with your bank and your bank keeps sending you emails back and forth that are repetitive, I would actually go to another entity. I will let you know that I know people that have actually applied to multiple, banks or through FinTech programs. And what you need to disclose is that you actually have applied for the PPP through other, entities and so forth. But you can actually apply to other entities. You don't have to sit back and stay with your with your bank. And we'll keep answering some of the questions. Let's go ahead and go to the next section, Raju.
Okay, the implication of the extended forgiveness period. Obviously, there is some implication that we can do. Obviously, the maximum employee compensation over 100,000, it used to be 15,385. Now it is 2.5 times of the actual payroll period of. So it's capped at 20,833. It's not the 24 weeks maximum. It's not going to be 24 divided by 52 anymore. So it's still only 2.5 times that number. They capped it at a 2.5. Same thing for the maximum for self-employed individual is still 20,833. For owner compensation, for partnerships and everybody, it's also 20,833. Obviously, increasing that, increasing the period, increasing all of that, it reduces, because some clients were trying to see if we prepay or we do a bonus or we do larger retirements or prepayment of rent. Well, it eliminates all of those other expenses that they were trying to include, and marginally qualified expenses, that's what we call. But now with the extended period, now you are able to satisfy the full use of the proceeds without having to do all of those other points.
All right, good. And one of the key things that keep in mind for a lot of you that are asking about applying and so forth. I know Joel actually mentioned that he applied through LendingTree, and he had applied to 5 different ones, including Kabbage and Wells Fargo. So for those of you that haven't applied or you haven't had any luck with your actual bank, you do have options to go outside of the norm of who you're banking with. I will tell you this, and this is from all of the businesses that I've worked with. A lot of businesses actually started shifting and changing their banking to more community banks, because they felt that maybe what they needed was more attention, and that's okay. That's their choice. But I'm just letting you know what I'm hearing within the small business community, which is something that's extremely important for you as a business owner. One of the things also that they asked for you, what about workers' compensation insurance for payroll?
Well, workers' compensation is part of payroll cost. So
it's included.
Right.
Okay, so it is included. Jonelle, go ahead.
It's included. What's included is the payment of state and local taxes.
Right.
So ours is paid through the state, so it would be included. But the employer's portion of federal taxes was not included in the amount that the calculation of the loan amount. So I'm always telling people that whatever was included in the calculation of the loan amount is what you can spend the money on. So I've had some people say, well, I know I couldn't include the salary of my 1099 independent contractors in my salary calculation, but can I use the PPP money to pay them? If it wasn't included in the calculation, then you're not supposed to be utilizing it when you actually expend the PPP funds.
Right. And to your point, Maribel, just as an FYI, 1099 consultants, just as an FYI, W-2 are actual employees. A 1099 is actually considered a consultant because they're actually working independently. So what the PPP does, it actually allowed them to apply for the PPP loan independently because they either are a sole proprietor, but they are being paid differently than the W-2 employees. So they can go ahead and apply for themselves. The key thing is keep in mind that a lot of this money that's been going out, a lot of the requests that they're asking, the overall goal was to make sure that we help the business or the businesses actually stayed afloat. So a lot of things were done, rapidly when it comes to, getting the money into your hands and so forth to help you stay afloat. But one of the key things right now is that within time, they're going to start looking at documents. They're going to start looking at everything. So we want to make sure that with the information that we're sharing with you, it's information that we know that they're going to start asking, so that we want you to do your due diligence so that you can actually take advantage of and so forth. So one of the questions in regards to the W-2, can the PPP cover wages paid to W-2 employees that are also partners in the business?
Well,
Yeah, but there's a limitation, as
Right.
Raju said. You're limited to how much you can provide as payment to yourself as an owner of the business. But yeah, if you're paying yourself as a W-2, that's fine. That's eligible costs.
Yeah. Okay. So let's go to the next, and we'll keep answering questions. So please keep typing. I just want to make sure I get to all of the questions, as we are moving forward. So let's talk about the payroll cost.
Well, yeah, there is obviously the big change on the payroll cost. Prior to this, the payroll cost had to be 75% of the forgivable amount. Right now, with the new regulations, is 60%. Okay, and what it does is the 60% cost requirement is not a cliff. What does that mean is, it's not if you didn't need it, you don't get anything. No, you will be able to get proportionally reduction on that one. There is a proportion reduction on that. And it also applies for the borrowers who take the 8-week option. So before it was only 75. The way it was interpreted in the first round is it was a cliff, but obviously they clarified that. And now we have that it's not going to be either you get it or not. They will do a proportional reduction in the forgiveness amount. And that also can work for companies that use the 8-week period.
Jonelle.
Yeah, exactly what he said. Again, the reason I think that it was extended from the 8 weeks to the 24 weeks was to assist those businesses that couldn't ramp up their staffing as quickly. The 60%, again, our agency and others heard from small business community that 75% was a little too much in that short amount of time. So they lessened the amount that had to go towards payroll costs and increased the amount that could go towards the non-payroll costs. But when you think about those numbers, the 60% is not a maximum. It's a minimum. You can spend every amount of this loan on salary costs if you want. 100% can go to salary costs. But when you look at the 40%, that is in fact a maximum. It's a hard ceiling for that. You don't want to go over it because, as Raju said, you'll have a proportional reduction in the forgiveness amount.
Right.
Yeah. Go ahead, Raju.
Do a proportional reduction on that. So if you spend less than 60%, your maximum will be capped. That will become your 60%, and your maximum on non-payroll costs will be also maxed at 40%.
Right. And keep in mind also, the moment that you come in and you're doing your due diligence, the goal of the information that we're providing is to ensure that you have this loan forgiven by way of the closest to 100%. Because at the end of the day, what's happening is a lot of people believe, hey, it's free money. So let's just go ahead and no, it's not free money. It's still a loan that can be forgiven. One of the things that we're encouraging businesses to do is definitely documentation making sure that you actually ask questions. That's why we're having, with the SBC and the SBA webinars like this, to make sure that when the time comes for you to fill out that application, that everything that you needed to do in order to have the loan forgiven, the higher percentage. You know what? And I'm actually a strong believer in that. Listen, if you hit 95% or 90% and you got that section forgiven, hey, that's awesome. But I think that what's happening in a lot of businesses, there's a lot of confusion because people are listening to so many other people that they're giving them advice and they're giving them suggestions and they're not doing their due diligence. So the overall goal is, that's why we're doing programs like this and webinars. So there's a couple of questions, that are tied together. Jonelle and Raju. So if someone's actually exhausted, the monies because they went and did the 8 weeks, are there any opportunities to actually apply for additional funds, or what parameters are being considered in order to change those 8 weeks to 24, even though they've already, exhausted monies?
There's no, I know that the new legislation that's being floated is going to allow businesses to have more than one loan if it passes. And again, this is just, legislation that's being introduced right now. That doesn't mean that's what's going to look like, when it comes out on the other side. Has to go through both houses of the Congress and then to the president's desk to be signed. But currently, a business can only have one loan, and it's up to your lender whether or not they have the ability to modify that loan. They're required to report to the SBA when the loan is actually fully dispersed. Up until the time that they report that to the SBA, they have the ability to modify the loan, but it probably is not going to be based on a higher amount unless you can show that the calculation was done wrong in the first place. Because you have to remember that the main crux of this particular loan program, especially for the application, was that the borrower certified that the information they were giving was correct and true. So that we didn't require the lender to do a really deep dive on that loan amount figure. They just had, if they caught any real easy errors where someone maybe had included their 1099 employees and shouldn't have, but they weren't doing a deep dive on the amounts that the borrower was giving. Or was giving as what they needed for the loan. So if you have to make a modification on the loan, it's not because you need more money to run through the 24-week period, because that wasn't included in this new guidance. It allowed people to spend it in a longer portion of time. I think, to my way of thinking, it was to help them get closer to that 100% forgiveness. Because you could then say that during the 24-week time, maybe 8 weeks of it you spent the PPP money on, the rest of it you spent money that you had generated from your revenues once your business got back open. So you could show that you were going to spend more than the loan on that. So I hope that answered the question.
Yeah, and thank you. And I think that that's the main thing right now, because we are in information overload. I do know that the county itself came out with their own forgivable loan as well. And initially you could not apply if you had received the PPP loan. I'm not too sure about the EIDL, but I will let you know that I was actually on a webinar a couple of days ago, and they actually are talking about, if you have exhausted PPP money, then you will and can apply for the loan that the county has as well. I know that there's 2 entities that are working on that: Partners for Self-Employment and Tools for Change. So that may be something that you may want to look into as well. We can definitely send more information on that. So let's talk about the favorite section for you, Raju, the FTE. And what does FTE stand for again, Raju?
Well, the full-time equivalent. So that's the way they are calculating what your employees are for the period. Now, these reduction exemption are brand new for this package. Introduces 2 new FTE exemptions. So if you qualify under one of these 2, you are pretty much safe from not, having a loan, or, not having a loan and get forgiven for the loan. Obviously, inability to rehire individuals who were employed of the recipient on 215, and an inability to hire similarly qualified employees for unfilled position on or before 12/31. Now, those, I think so, was made specifically for more skilled workers that you may need or you need it in your workplace. So you have to kind of meet those two requirements as A and B, or you have the third ability or the third possibility or inability to return to the same level of business activity as business was operating on before 215 if it was deemed by some of these Secretary of Health and Human Services, CDC, or OSHA, or any other during that period from 321 to 1231. Now, this is a little bit vague because you can basically include everything in there. So we are hoping that we'll get a little bit more guidance in that. Otherwise, everybody would qualify under that third possibility, okay? So you need to kind of look at it from that perspective, that with that third piece, you will be forgiven. You'll be almost forgiven if you didn't hire the people right, okay? So this is a brand new exemption that they brought up for this package.
And that's why I said earlier that the goal is to make sure that you actually understand this so that when you do fill out the form, which once again, I want to reiterate that the application, the loan forgiveness, we're going to go and do a part 2 with this because we were diving into asking more questions about that in specifics. But the goal is right now for you to understand what it is that you need to do in order to get the loan forgiven because we know that there are certain things that are going to fall in the crack for some businesses that may have not done their due diligence. So we are looking at that. We actually had all of that done a couple of, maybe 3 weeks ago. And then with new legislation, everything shifted and changed. So we had to go back to basics. So I know that Raju's brain, Jonel's brain, my brain is on overload with all of this information, but we're trying to simplify it for all of you to ensure
Right.
that, you know, we give you, you know what, up to date information.
Right. Now, one point for all of these things, you need to be able to have documentation that you did all of those points to qualify. It's not an automatic qualification. You need to have documentation, whether it be through, you know, the Center of Disease Control. You've got to have documentation, or they were employed by you before 215 and you haven't been able to replace them by 1231. You do need to do documentation that you did your best effort in trying to get those employees. You must show that you had an effort and documented in some form that that portion was tried to do. Now, on the third piece, we may need more clarification, and we are hoping that within the next few weeks, we'll get some more clarification on the third bullet point.
Yeah, and one thing I would encourage all of you business owners, you know, I know a lot of you are working with accountants and CPAs and so forth. Ask questions, inquire, and if you have any doubt, you know, talk to, you know, you can ask questions, you know, as Brian made mention earlier, you know, working closely with the SBDC and so forth. The reason being is because everybody's looking at this and they may be interpreting it differently, but the overall goal is making sure that as a business owner, once again, that you meet the qualifications in order to actually have the loan forgiven. So this was something that we were actually talking about, you know, the importance of the FTE safe harbor.
Right.
I think this was probably one of my favorite sections just because of the word safe harbor. So if you want to go ahead and elaborate a little bit on that and the dates and how this actually has been, you know, included.
Okay. In the first way of doing it, they had the period of 215. You must have the FTE from 215 to 426, and the FTE must be restored to the level of 215 by end of June, 630. That was the way it was set up. Now they have created a new changes to that model, or that point must be, obviously the first one must be met, which is FTE from 215 to 426, and it must be restored to the same level by end of this year, 1231. That was a big change, okay? Or the forgiven application date. Now they may have, they have made that change recently under the application, because the original one was 1231. In the application, it came out that it says forgiven forgiveness application date. So if you put it in by the date of the application date and you were at the same level at 215, you are safe. Okay, you do have a safe harbor there. Obviously, it applies to all PPP loans. Okay, you need to, for it to be a safe harbor, assess the eligibility of the with respect to the requirement at number 1, which must be the FTA at 215,426, and consider which FTA calculation method is more beneficial. In the first application, when it came out originally, you had 2 methods of calculating FTE. You will be forced to look at which one works better for you and decide which one you're going to move and use throughout the whole application. Okay. And then obviously you had some base period also that you had a choice. So again, you do the calculation on those base period and you see which one you would rather use in your application. Okay. Now, all or nothing is a point that is critical here because I'm using that as an example. If 200 FTEs on 215.20 and you had 199.5 on 12/31, the safe harbor will not eliminate or reduce your FTE. That's not automatically. You need to be at the same level. So it's not proportional there. So again, you go back to the application. There's a section in the application that you need to kind of work throughout, whatever that reduction is. But it's not proportional. So it is all or nothing point in this safe harbor, okay? Now, the other key point is even if you are not eligible or unable to use the safe harbor, you can use the fact that if the employee was quit, was fired for cause, or refuses to be rehired, that can work to your benefit to get those to the right FTEs. So you still have that point to get back and get the forgiveness. So basically they have opened up a lot more for businesses to not to have a loan. Basically, they have made it very favorable for businesses. There are some good points on choosing 8 and 24, but they have opened it up for the businesses, made it easier for the businesses to get a forgiveness.
Right, and this is one of the things that we actually want to let you know, that with all of the changes and the updates, they're more favorable to those of you, the borrowers, because they took into consideration a lot of the things that were happening and so forth. Jonelle.
Yeah, this is one of the more complicated portions, I think. And like I said, there's going to be additional guidance coming out.
Right.
So it's more of a, well, stay tuned. If you're, going to take the 8 weeks, you obviously have the time now to start the forgiveness application. But we're actually not going to start talking about the forgiveness portion until probably next week is when we'll start doing it as a district office.
All right, thank you. Okay, and the next update is the election to use the 8-week forgiveness period. And I know that a lot of the businesses right now, it's like the mass confusion of 8 weeks, 24 weeks, the reasoning why. And I'm the type of person that I like things to be simple. Don't overcomplicate it for me, because if I have to overthink things, it's going to actually blow up, or my brain is actually going to blow up. But we want to talk about, who's going to benefit, from go ahead and choosing the actually 8-week, period and so forth. So Raju, we were talking about this yesterday. So if you can elaborate, a little bit, because we did say that, hey, there's some people that are just going to benefit from the 8 weeks. So highlight some of that, please.
Well, there are some benefits to doing it for the 8 week. I know everybody is looking at for the 24 weeks, so it gives me more time. But you have to kind of do a calculation internally to figure out which one is beneficial. Even if you don't use your full amount, it sometimes may be more profitable to keep it under the 8 week. And those are the ones that might have lower FTE during the 24 weeks. So the basic assumption here is, okay, I did what the original program was. I paid my people during the 8-week period, but my business hasn't come back. So my FTE, I got to do something with them after the 8 weeks. So I will not be able to meet my 24-week period. So at that point, you're better off using the 8 week, even if you may land up having number out there. And because since you're not going to be able to meet the 24-week period guidelines, your forgivable amount will be lower. Okay, so then, so that's what happens. So obviously, during the first 8 weeks, even paying employees performing little or no work, if you did that, this is the easiest way to do it, so at those points, you will obviously want to use an 8-week period and get the application done. Now, obviously, I think so all of us are kind of tired of having to go to more of these PPP webinars and seeing all the changes. So, a lot of business might just say, you know what, let me get it done and finish. I'm done with that. Okay. Obviously, there is some benefits for the 24-week period, like Jonelle mentioned, that there are some businesses that did not ramp up to be able to use all the PPP monies. So obviously, switching to a 24-week period is beneficial for them, and likely to maintain FTEs and salary for the, for the 24 weeks, or you plan to use the safe harbor, which we covered briefly in some form earlier in the earlier slides. But those are the ones that you need to look at. And if you're not going to be able to maintain full-time employees at the same level or end at 12/31 at the full-time level that you need to, then you may want to consider the 8-week period.
Yeah, again, this is flexibility that's only available for those loans that were approved prior to June 5th. June 5th and forward, everyone's going to have the 24 weeks. This is if you had one done between the date we started, which was April 3rd, and June 4th. If your loan was approved during that time period, you have the flexibility to choose the 8-week or the 24-week. It just has to be something that you choose based on whether or not it's the most beneficial to you, as Raju said.
Yeah, and you have to kind of look at your numbers, and you got to do some math on this to see where you are now in the 8-week period and where you may be in the 24-week period.
Yeah, and one of the reasons, just as an FYI, why we're doing this also, there's so many, to Raju's point, there's so many, organizations and businesses that are actually putting together their own webinars focus on the PPP and the EIDL loan and so forth. And we get bombarded from people. Someone actually got upset and mad because they were on a webinar prior to all of this stating that the EIDL loan was actually a grant and they didn't have to pay it back. So there's a lot of misinformation that's going out there. My thing is that, when we decided about putting this together, with the SBDC, and the SBA, the overall goal is like, what can we do to actually assist and help the businesses? Because at the end of the day, what we want to be is your trusted advisors when it comes to a lot of this. So this is pretty much all of the information with the latest updates of what's been going on and so forth. So for those of you that actually have not taken the time to apply, you can still go ahead and apply through some of the resources that we talked about. I know people had actually mentioned that they went through, Lending Tree. Some have actually gone through community banks. Others have gone through the FinTech or your actual local bank as well. The choice is actually up to you. But I will tell you that a lot of the applications are going back by quickly, smoother the process is. And this, what we wanted to do was just give you an overview of what you still needed in order to apply. So these are going to be the documentations that you actually need in order to apply, in order to actually go and speak to your lending institute. And I think that once you have, what all of your documents is going to be considered and so forth, take advantage of that. So there's another question actually from George. That the single loan approval right now is true for both EIDL and PPP, meaning that you can have both EIDL and PPP, or that would be considered two loans. The EIDL loan is one loan and the PPP is a separate loan, correct? Jonelle.
Right, and they can have each of the loans. They just have to be careful how they utilize the loan proceeds, because you don't want to have what's called a duplication of benefits, where you're using, say, some of the PPP money for salary and some of the EIDL money for salary during the same period of time to pay the same employees. You want to keep those separated because because of the fact that you have the requirement that most of the loan for PPP has to be on salaries, it's easier if you use the PPP for the salaries and the EIDL for your other obligations until you run out of the PPP money, and then you can use it for salaries.
Yeah, yeah, and I think that that's one of the key things. Jasmeli actually was asking that question. If you could actually apply for, and the answer is yes. But to Jonel's point, keep them separate. Listen, a lot of this is going to be, the thing is that as a business owner, we're all looking to stay afloat and to come in and get resources and funding and all that. But don't lose your heads, because now you've got money and you're going to start paying bills and paying salaries and so forth. Do your due diligence, document, keep all of the necessary, organize yourself so that when you do start applying, you're not in shock when you sit back and realize that you didn't do your due diligence, because that's what we're trying to avoid. You know, that's what we're actually trying to assist and help you with, that you actually, we don't want anybody to get in trouble. And I know that there's a lot of businesses that probably will get in trouble because they didn't do their due diligence, you know. So, you know, and just as an FYI.
Orlando, on one point, the use of the money for both the EIDL loan and the PPP have certain restrictions. I've heard some people use the money already for not correct use of the funds, and they will find themselves, hopefully nothing will happen with them, but they need to be very careful, and they need to be able to talk to their professionals to make sure that what they are using it, or at least read the documentation they sign, because it kind of says what the use of the funds are there. Okay.
Yeah, and I know, Jonel, that you have a 2 o'clock that you have to go get on. So thank you very much. We'll answer some of the questions because we're actually wrapping up. You know, this is actually the website and so forth, what your next steps are for those of you. So Jonel, thank you very much. And I think we'll go ahead and wrap up some of these questions.
Okay, thank you for letting me be on there, and thank you to Brian and the Small Business Development Center for letting us do this.
All right.
Thanks, have a good weekend.
Thanks, you too.
All right. So one of the questions, you know, Anna wanted to know, is the bridge loan an EIDL loan?
No, the bridge loan is not the EIDL loan. The bridge loan will roll over into the EIDL loan, can be rolled over to the EIDL loan, or should be rolled over to the EIDL.
Yeah, it goes back to the duplication of benefits that Jonel mentioned. Basically, duplication of benefits would be anything that is duplicative of that assistance you're receiving. So, for example, if you get a PPP and you use it for payroll, you can't get EIDL and use it for payroll as well. That'd be duplication. For the bridge loan, the state of Florida bridge loan is structured so it does not duplicate SBA disaster loans. So generally what happens is you roll that into an economic injury disaster loan, as Raju said.
Yeah, and keep in mind, because listen, like I said earlier, we were being bombarded with all these different loans when everything started. The EIDL loan, the bridge loan, Florida bridge loan, the PPP, and now the county, Miami-Dade County also has their own, you know, forgivable loan and so forth. But there is a lot of information out there. The one thing, once again, we just want to make sure that you streamline and whatever you do apply, you actually take advantage of. You're welcome, Anna. And there's a question, you know, Raju, from George. He was actually going to send payroll, IRS and Florida revenue for Q2 and the PPP funds. So by way of the deferral, you know, that's allowed, he's not going to be penalized from neither one, correct?
Well, yeah, no, for the IRS portion, because it's the Social Security, the FICA portion of it, okay, is he still has to pay for the unemployment state taxes, but that's part of his PPP loan, the forgiveness, which is all the state and local taxes that he pays.
Right, and one of the questions that actually was asked in regards to the bridge loan, Brian, to your point that you talked about earlier, for those that actually received the bridge loan, you know, once they actually get their EIDL loan, is that how they're actually going to, or they can pay off their bridge loan with those funds?
Basically, usually how it works is the expectation is once you get approved for SBA, because the bridge loan is a bridge until you get insurance payouts, you get an SBA disaster loan, or you get your profits pick up and you're able to have some cash back in your business. the expectation is always that you will use that to prioritize the bridge loan and pay it off. For COVID-19, it's been a little more fluid. What we're recommending for folks is, in terms of the bridge loan, if you haven't utilized the whole portion, that you do set aside a certain portion of it as kind of like a backup, because for that one, in terms of a lot of the loan programs, that one does have a quicker, basically due date. It's basically 12 months. Basically, it's going to be 12%. It's 12% interest if you don't pay. So we've been asking, like, set aside if you haven't used it. If you have used it, then that would be a consideration you would want to put towards the SBA Economic Injury Disaster Loan or for the PPP loan. Because for PPP, you can use 60% payroll, 40% non-payroll. And for the EIDL, if you get the PPP, you can use that for anything not payroll and still not have the duplication. So you just want to pay attention to it for the bridge loan, because the due date's going to come up pretty quick from when you got the loan, and you want to pay attention to what was the date, and also you want to make payments on it, because at the end of the day, for the state of Florida, they're going to look at it. Have you been working in good faith with them? Have you been staying on top of this? And if they find out that you got an SBA disaster loan and you didn't repay the loan, then they might not be as forgiving in terms of kind of working with you on it. So we're encouraging folks to just kind of map out what the due dates are, and kind of, as Raju said, uses of proceeds, and also just pay attention and don't get caught aware, because most folks spend the bridge loan and then the due date comes quick and they're like, oh wait, I haven't done anything. Can I get a deferment? Can I do anything? And they're like, no, you haven't really prioritized this and you haven't taken care of it. So we would just encourage you, if you do have the ability to roll it into your economic injury and disaster loan, you should do that. If you do have the ability to set some funds aside that maybe you can make a payment later in the year, or as a reserve, that's a good idea as well. But just make sure you prioritize all your debts and make sure you map out when everything is going to be due and what's the rules of the road for each one.
Yeah, and thank you for sharing that, because I think that this is why, with a lot of businesses, one of the things that we kept, clarifying, if you got all three loans, I would have gone in, and my suggestion within my business, I would have set up 3 separate bank accounts, because I would have actually gone in and would have mapped it out to the point, okay, so I got the Florida Bridge loan first, now I got the EIDL loan. The reason where a lot of businesses are going to get in trouble is they're going to come in and intermingle, because they're like, well, I've got money. So one of the key things is, don't get yourself in trouble. So if you're using some funds, for certain things, that you can't intermingle. So if you do have the PPP loan, to your point, Israel, pay payroll. And if you have idle money and you can use idle money to pay actual utilities and so forth, expenses, go ahead and keep them separate. Keep separate receipts, keep everything separate. I know that it's probably going to be more work for those of you that actually have accountants and CPAs and so forth, or even for yourself. But the overall goal of what we want is, we just want to make sure that when all businesses survive, everyone that borrowed money didn't get in trouble, because they did their due diligence, and they actually, were good stewards of the money that was lent to them for the purpose of allowing them to stay in business and so forth.
And Orlando, from your response, it sounds like Raju is your consultant.
He is, exactly. So that's the thing I say, Raju, what do I do? Listen, I stay in my lane. I know the things that are easy for me and the things that are hard. And when it comes to finance, I give it to Raju because he understands that. But the last thing that we actually want to talk about is the PPP-FA loan forgiveness. We're going to do a part 2, and we're going to actually talk about the specifics, because we already had a presentation done when we were going to start, and we just realized that we needed to wait for all of these new updates to be made and so forth, so that we can come in and facilitate that information for each and every one of you. So we are going to do a part 2. We will be sending out information in regards to that and so forth. So with that being said, we want to thank everybody that came on and they joined. And I see that finger, Raju. Go ahead.
Yeah, just to give them an idea, there are 2 applications for the forgiveness right now. One is an easy one, and then there's one which is a long workout. So just to be aware, that's why talk to your professional to make sure, whether your professional or consultants or advisors are, to make sure that they at least are aware of those two and help you through the process of those two applications.
Yeah, and once again, good advice, Raju. And listen, and thank you, everybody. I hope that you know what you enjoy your weekend. Stay dry. You know, I appreciate each and every one of you that you keep joining us. We're doing a workshop next week on Thursday. Trim the fat: marketing during COVID-19. We are going to be doing some other workshops in the future as well. We're going to be talking about, you know, the government is still buying, get back on track, you know, open for business. So there's a vast array of webinars that we're doing in partnership with the SBDC. So we encourage you to go to the website and to actually, you know, register. The overall goal is that we just want to keep empowering each and every one of you as business owners with information. And we also want to make sure that you don't feel alone and isolated. That's why you have great resources like the SBDC, the SBA, and of course, you know, and thank you for all the kind words for everybody. You know, this session was being recorded. It will be available, and we do have other webinars on the FIU SBDC YouTube channel, so that you can actually go and enjoy looking at those. It was great seeing you too, Berta, and everybody else. So thank you very much.